Our next guest says that the oil bubble has not popped just yet, and futures are actually moving prices rather than geopolitical events and fundamental causes. We're joined now by Fadel Gheit. He's an analyst with Oppenheimer. And Fadel, it's been a very volatile few days for oil. The first 4 days, one trend, which is down. Today, it's kind of all over the place and is now up about 2%. How indicative is this of the volatility, the inherent volatility in trading oil?
Well, oil prices have been moving up for the last 4 or 5 months, not fully supported by market fundamentals. In my view, oil prices should not have exceeded $80, but at one point they exceeded $120, and on the Brent, it was even much higher. The pullback in the last few days is a correction, and it is timely. It is needed to take some heat off. Higher oil prices are bad for the economy, bad for the, for spending, for consumer, for confidence. So a pullback in oil prices is good news, and still oil companies will make huge amount of profit this year. Will be the largest profit they made since 2008. So it is good news for everybody.
Can you explain to us how a sell-off in metals, silver in particular, because of margin hikes, because George Soros and other big hedge funds are cutting their positions, spilled over into oil? I mean, margin hikes on silver doesn't necessarily mean that we're going to get margin hikes in oil, does it?
Well, basically, oil is the granddaddy of them all. All commodities revolve around oil. Oil is really the gang leader. Most of the speculators, the hedge fund, the pension fund, all the financial players use oil as a counterweight to the dollar. Some talk about the dollar is gaining strength against several currencies that push oil prices down. But all the financial players have been in a sell-off mode of all commodities over the last couple of weeks, and culminated obviously on the big sell-off yesterday. It was a stampede more than anything else. It made no sense whatsoever. Oil prices moved up very sharply for no reason and came down very sharply for no reason. And I still believe speculation has a lot to do with that.
Will regulators come in to cool speculation in oil then?
Well, basically, a curb on financial players will curtail volatility significantly. It will not eliminate all of it, but it will eliminate a big portion of it. In my view, oil prices are probably 40 to 50% higher than where they should be trading, but they are not going to trade at $70 anytime soon. But should they go to 120 or 130, I don't believe it's likely. But again, it will depend on other factors such as speculation over potential supply disruption in the Middle East. We haven't seen any significant disruption so far, but in the event of a disruption, I think oil prices will definitely go higher.
Talk to us about how the rally in oil prices compares with the surge that we saw in 2008. Are the two comparable at all?
The 2008, basically the 2008 was much bigger bubble than the bubble that we have right now. Oil is in a bubble. The 2008 was a big bubble. It was exaggerated when at the end of the day, everybody was talking about $200 oil, and some people even talked about $300 oil. So when you hear these comments, you know that it is about to end, and it did indeed. So in 2008, at least people were justifying the run-up in oil prices by the growth in China and Asia in general, and the economy was obviously moving at a very high rate. Now, it came to a screeching halt, and oil prices went from $148 in middle of 2008. 4 months later, they were trading in the low 30s. So obviously, it was not justifiable by supply-demand fundamental in 2008 to see a crash of 70% drop in oil prices, but nevertheless, within 4 months from the bottom in the mid-30s, oil prices went back to $60. So it was a V-shaped curve.
Right.
It was not justifiable in the way down. It was not justifiable in the way up. I do believe curbing speculation will do us a lot of good, will eliminate those financial players that are causing havoc in the marketplace.
Fadel, no matter whether it's speculation that's driving oil prices higher or fundamental reasons, we've got the violent moves in oil pushing gasoline prices up. When can we see the move up or the move down now over the last 4 days filter through to gasoline prices?
Well, yesterday, the drop in oil price is almost $10. That is the equivalent of 25 cents a gallon at the pump. Are we going to see 25 cents drop today or tomorrow or next week at the pump? Not likely. The fact of the matter is when oil prices drop significantly, the price at the pump drop very slowly. So, but on the other hand, if oil prices start moving up sharply, gasoline prices at the pump immediately move up. We are entering the driving season, and traditionally we will have higher gasoline prices. So motorists should not hope for a big drop in gasoline prices. We better get used to it because it's going to be here for a while.
All right. Thank you so much, Fadel Gheit.